Hello, greetings, everyone. Welcome to Monday, April 28th, 2025 edition of Trading Trends. Coming at you with Rocco here. Well dressed, Rocco, handkerchief and everything. Woof, woof. Good boy. Thanks for being a guest on the program today. Speaking of guests on the program, I'll be on Spaces tomorrow. The chart report is at 11 a.m. So if you're a user of X, Twitter, FinTwit type stuff, log on to that and you'll hear my thoughts about the market, similar to what you hear here, but a little bit more. Tomorrow at 11 a.m. Again, chart report on Spaces. Maybe I'll tweet about it. I'll tweet about it as well. Promo. You can follow me at J to the Sal on X. It's always still weird calling it X, but I know it's an old joke now. All right, so let's get into the program. Pretty simple show here. There was not a ton of multiple Sigma moves, but we will recap what happened today, intraday. Interesting price action here with the markets. But again, we are looking at Europe, specifically Germany, making new all-time highs, as well as natural gas that jumped 6% today. We were talking about this on Friday. It's been the worst place to be in the past about a week and a half or so. We talked to a viewer in Italy who was short nat gas, and I said, you can buy it, be long below or above 15.5. We'll take a look at the chart. It went as low as like 15.15, and now it's catapulted above again. So we'll take a look at that. Again, the dollar is just having really, really bad days, and folks are flocking to Europa, specifically Germany. Germany looks really, really great. EWG making new all-time highs. I know, like JC, head of All Star Charts, jokes. He goes, "Is this a bear market again?" Someone tell me, because usually Germany would not be leading the fray, right, of all-time highs. So can't keep a great man down like the S&P, but it's still not the place to be. We'll take a look. And like I said, in terms of multiple Sigma movers today, to the loser side, literally nothing. It was below average volume day. We'll take a look. But without further ado, let's get to the intraday. Hi, that's me. Tired as ever. Hope everyone had a fantastic, warm, nice weekend. Where am I looking at? So in terms of single stock, big movers, NVIDIA down 2%. Stock still looks like crap. Palantir, this one of the best stocks in the market, if not the best, up 1.7% today to 114 handle. Very impressive given this tape. And really a lot of inside moves. Gold was up today, up 1.4, probably the only other place to be in terms of stock ETF land. There's very few, not the only, but it's obviously been a very amazing place of strength. If you have a ticker or something like that, put it in. I'll take a look at it at the end of the show. So here's the intraday action. So a lot of people were, I know, like FinTwit and all that stuff yesterday, looking at, kind of half joking about Black Monday, and the futures looked bad with Bitcoin selling off a little bit last night. And the price action did look ugly going up until we hit a low at 130, right around the European close. And, Europe's been getting a lot of the action lately. So we hit 545 in SPY on the low. I'm rounding here, but it actually did hit 545.03. And then after that, it was a straight ascent all the way to the closing bell. We rose all the way to 552, so more than 1% or so. Again, it was below average volume today. And then a little bit of selling right towards the close. We did rise and close above VWAP, which was 549.5, signaling strength with a close of 550.25. But all in all, not much of a huge day. We did all that work to crank out nothing. And I think the enthusiasm is running out on the market to the buy side. To the upside. I do want to say that Wednesday and Thursday, in case you keep your head in the sand, sand and a beach is a great place to be right now. Maybe we'll go one day this week. Gotta love beach trips in April or May if you get it. Anyway, earnings Wednesday, Thursday, massive days, massive. 20% of the S&P reports on Wednesday, Thursday. That's your Amazon, Meta, Apple, Microsoft. So we'll get a lot more of the picture. I don't like the setup going into it. What I mean by that is we had a massive rally. I've been referencing this. If we were in a normal volatility environment, VIX sub 20, you have a lot of visibility into, forecasting. It's not driving with no windshield wipers and a hailstorm. And usually typically is around a 15-day cycle. I signaled this about 3 weeks ago on the 9th. I said on or around the 24th of April, this is going to end right around 545. Well, we're after. I talked about this on Friday. When you're wrong, sometimes you continue to be wrong, and you have to adjust your forecast and really sometimes your view of the market. That being said, we have this was a nice movement here. We have a higher high here, right here at the close of what we said today at 50 even. I just still think it's getting a little long in the tooth. Some key levels that we have been holding is the 21-day exponential moving average at 540 and the 50-day moving average just a touch underneath that. So all in all, impressive movements. I do think it's going to hit resistance here. Oh, I'm sorry, I misspoke. The 50-day moving average is 555, the simple 50. And I don't think it's going to surpass that. I think the thing ends this week. You're starting to see the RSI just flatline. I wouldn't say it's starting to dip. It went down 0.1. We'll call that flat. And in terms of stochastic momentum mix, not a ton of takeaways there, but we're still rising. It's good price action. I just have to reiterate, trees don't grow to the sky. You have a falling 200-day moving average at the upper Bollinger Band. I just don't love the signals here, especially off of a massive move from, excuse me, from 494 to 550, given this one contraction here that you had when it was, Tweet City with Xi and all that stuff and the tariffs. So in terms of, as I said, I do expect this to base around 540. I think we're a little bit rich by about 2 to 3% here. And I expect to come down in about the next 2 to 3 weeks. And it very likely will freak people out. But let's take a look at what other things happen in the market here. And again, in terms of the ceiling, if you get past 555, awesome sauce. I don't think it gets above 570. There's a lot of weight here. Last thing on this longer term chart, the intraday, the 1 year 50% Fibonacci retracement, something very big I look at. I'll round to keep things simple for folks. It's actually 547.5, and SPY will round up to 550. And we're right there today after this strong move. And again, we did all this today specifically to crank out nothing. Volatility was also up. We'll take a look at that chart. Not a ton of charts today, like I said, because there were a bunch of movers. And after that, in terms of the 1 year, after the 1 year 50% Fibonacci retracement, after that, the level I'll be looking for is right around, of course, the 200-day moving average, 573. But I don't think it's going to do that. I deal in terms of probabilities. I just don't think it's likely. All righty, let's take a look at what the heck moved today. Natural gas. So let's take a look at this. A lot of folks play this. Options trades come to mind. So let's take a look. So we had said before, you can see the 200-day moving average there. Just a flat line here. It's been stuck at 1628. I'm looking at the stock, ticker UNG, of course. And we got above that today for the first time since we really slid beneath it last Monday, if you recall. So a big important move. Like I said, I think this one's starting to base here. I think it's not a bad pickup. For sure, if you pick it up under a 16 handle, I think that is not going to happen anymore. Stuff that gives us pause here is that we were oversold really for the first time since July, which is a bit of a character, sentiment change and saying, let's take a little bit longer for that. Again, my level pointed out to the user was 15.5. Right here is 15.5. So we had 2 days beneath it. And after that, a rally here. So again, energy did well as well today. But this does not always exactly correlate with rises in U.S. oil, which we will look at also. So energy will be a focus today. So I expect this one. This has had strength. I expect this to get to the 50% RSI, which for more intensive, for closer than not, is right around 1790. So I think you got another $1.30 in this. Today was a really momentous move. I think you have another 8% like that or so to the upside. And then resistance would probably hit right around that 18 mark. I'm not sure if it has quite that much to go, but I do like this one to the upside. It's going to be volatile as natural gas is. And this was the only place, the only ETF that they flocked into today. I only deal with 1X. I don't look at 2X, 3X, MicroStrategy, Tesla, NVIDIA, crap like that. These are real markets, 1X. You could do the thinking for yourself. So they flocked into natural gas today. That was the only multiple standard deviation mover to the upside. To the downside, right there, 0. Okay, so immediately we get into the top, just real fast because we highlighted at the beginning, Germany all-time high. Again, this is a 1 year chart on Germany. What can you say? Absolutely stupendous. This used to look like the S&P. Remember this? Feels like it was way more than last year, but here was Armageddon. Great chart, 52, our all-time high today, rather. I just think it's come a little bit much, and this is kind of not a safe haven trade, but obviously with the dollar depreciating the way it is, there's been a lot of focus to Europe. The EFA value, EFV, also hit a new all-time high today. Deutsche Bank is powering this one through the German ETF, as well as other German companies. I think Bayer and some other ones that comprise a lot of this ETF. So some really great stuff through EWG. I just think it's going to descend a bit for the next 2 to 3 weeks to about 37, right around 37.30, 37.5. So that'll be a nice $2 or so reduction, which would be, seem like folks are exiting the European landscape. But also another thing here that makes me feel like, and you can really take this home, we barely squeaked out a higher high above March 18th. And also, you really want to see bullish confirmation. And that means when you get a new price high, you want to have a new RSI putting in a new high level as well. So you want to have it confirming. And right now, the high RSIs, we're back there at 76 when we made the previous 52-week high. So I don't like seeing at an all-time high, not seeing higher RSI, super microcomputer vibes from last year, typically from, moves come fast moves. I think you could typically potentially see this at 37.5, faster than we think. So that would be your entry, though, when you get into Germany. And again, this thing was oversold, touching the 200-day just 3 weeks ago from today. So a radical move higher, really almost like in a straight line, 33 to 39, and this is not a super volatile nation. So Germany, I think you're going to have this not collapse, but it's going to come down, I believe, in the next 2 to 3 weeks, and that will be your entry when it touches that 37 handle. All right. I just wanted to mention that because it was at the top of the show. We didn't have a ton of movers today either way. Best 3 gainers of the past 5 days, no repeating charts. Ark up 15% the past 5 days, or an average of 3% a day. Stupendous. This is super important. I'll be talking about this tomorrow on the Spaces chat. I hope you join me. We are here at a rising 200-day moving average. Ark is coming ever so close. It's about 40 cents away, less than 1%, from tagging its 200-day moving average, which it's largely spent underneath since March 7th, since it tagged this oversold environment. So that's what Ark is doing, led by, of course, Tesla and a lot of Cathie Wood's holdings. This may have, and this is kind of emblematic with what I was saying about the S&P, this may have a little bit more jump to go, but it's going to take quite a hurl to get above 51.5. It could potentially get on a tailspin and try to match the highs that we had from late March, was a 54 handle. I do have kind of a Bayesian probability of it reaching there. It's just less than 20% in my opinion. It's going to take quite a move to surpass the 200 moving average of 51.5, as I said. And again, this rally started at 41 on the 9th. Trees don't go to the sky, not even Ark. But this one's doing a nice job. This is also starting to just barely go south in terms of the RSI. Different situation, though, as I said before, in terms of Germany having a bullish confirmation. These are not new highs, obviously. In fact, lower highs, but it's trying to etch out above this this March high mark at $54, late March. So I think this will probably more likely over the next 2 to 3 weeks go back down towards 47 to $48. Wish I had more bullish things to say for you. I bet you that happens in about 2 to 3 weeks once all this runs its course like a bad fever. Next, and it's good to see folks flock into this, IGV. I haven't seen this in quite a while on the leader list. This is your North American tech software shares, ServiceNow and a lot of those types of firms. This one looks like it might have a little bit to go. Looks like it kind of wants to get to 98. This is almost emblematic of what we're seeing in Ark in a way. So what I mean by that is monster rally that started on the 9th. And what happened? It did it 2 days ago. Potentially Ark is trailing this one, and IGV leads, for example, testing your correlation. So its 200 moving average still rising, is at 94 even. We're at 94, call it 95 today. I'm rounding, as I said. This looks like it potentially wants to go as high as 98, and then potentially, again, this is volatile, could have a descent towards 90. But overall, I do like what I'm seeing in tech software. It is what you want to see. And again, the RSI starting to stall here right around 59. We have not gotten above that since February 18th, which was the S&P all-time high. So a lot of interesting things happening. The high for IGV was back in December. It was 2 weeks before Christmas. So it's been quite a while since these guys were the focus. But love the movement here. Potentially has a little bit more upside. It could want to tag as well, as I said, and get to these March levels of 96, even 98. I do like the strength here. But I see more choppiness. And by the time that 2 weeks is over, 2 weeks from now, I think it's about 90. Again, as I said, this is going to be affected by the tech earnings on Wednesday, Thursday. So huge, catalysts around that to the up or downside. Don't love the setup that we had going into it with the massive rally we've had. But again, if Apple doubles down and says, they're, I don't even know what they could say, but they're safe from tariffs and the new iPhones are $4,000 or whatever they say because they added a sixth little camera wheel there, kings of innovation, then, stock might sell off or rally. Who knows? You could have tomorrow's headlines and still not trade it properly. Next, the next biggest gainer of the week, the SMH. Always great to see folks getting into the quarterback of the ETF world of investments, and it's SMH. SMH, again, a monster rally, but look at this one. This is different. This chart obviously looks much heavier. You can see the 200-day moving average really rolling over. We've barely gotten above a 50 RSI. That's for the first time since February as well. Don't love this action. Yes, it did squeak above its 21-day exponential at what it was just $204. So we're above it for 3 days here. This one potentially maybe once it gets to 215, which is just $5 away, 2% upside. Don't love the chances of that happening. And to be frank, more likely, I think, is a decline to about potentially as low as this 190 level. Again, it's going to have a lot of bearing on what is said on from these companies on Wednesday and Thursday. Microsoft, in terms of what they're doing in terms of data center build outs, in terms of investments in U.S. companies and abroad. So a lot of almost positive, hopefully, rhetoric will take this higher. But this does not look wonderful. This looks tired, and I don't even really love the rally off of the April 7th lows. There's better charts in this. And when your quarterback is sick and he's not having a great game, not my quarterback, that's Jalen Hurts. And yes, I know he's skipping the White House visit today, and I don't care. He's my quarterback. And Saquon, same goes for him. Keep hurdling, reverse hurling, people, young man. Love you. I'm going to wear your jersey just the same. So that's the SMAs. Like I said, could go a little bit higher to that 215 level. I don't think so. Don't even really love the action today. It tried and closed down 60 bips. So that's what I have to say about SMA. It's more likely is a close in 2 to 3 weeks, right around that 190 level, which is just inside the lows from last week. All right, top 3 losers of the past 5 days. No repeating charts. Again, good vibes here. Volatility, the worst asset. Again, with the increase in nat gas, things have reversed. So look at this about volatility measured through VXX, a short-term futures ETN. This is down 16.5% in the past 5 days, an average of 3% and change a day for all you math home gamers. Today it did close up with the market flat. It did close up 50 bips, 54 bips. Unfortunately, as I said, I wish I had better things to say. This one may go a little bit lower, and it's VXX. Things get possible. We could delay tariffs. We could cut, tariffs in half on a country, et cetera, et cetera. But oh man, that is a lot of tickers. Can you give me your top 3? That is a lot of tickers. I can't go through all those, buddy. Try to give me 3, and I will do it at the end of the show. So in terms of VXX, getting back to that, thank you for the tickers. Please rank top 3 most important and what you want to see for the next 2 to 3 weeks on them, and I will highlight them. Thank you, Green Trading. For this. In terms of volatility, in terms of how much longer it can take to base, say this week, I'm potentially getting as low as 55, and almost it's very hard to do this in terms of a non-time series chart filling gaps. But there is something here at 55. It could potentially go that low, which would be a decline of 8 points from now. I don't really see it happening. I see us hanging in right around, honestly, where we are, probably not sub 59. And then in 2 to 3 weeks, a rally going towards about, honestly, I think it's going to get very close to around 75. I think it's going to match the fear that we had 1 week ago when we touched that 77, 78 level in VXX. So wish I had some better things to say to you. And this is important too. So VXX is at a 49.7. We'll round and call it a 50 RSI. I don't think things get much worse for it. I think it gets like what we did here on March 24th. In terms of going under the RSI, but I don't see it getting on the 200-day moving average. And even if it does, I still think it's going to be resilient and bounce up. An entry to me in VXX at 50 would be a gift, given the environment, and especially the flows. When the best areas in the market are Bitcoin, China, and gold, all 3 have which very little direct United States exposure through the mags, which is a lot of your heavy concentration, the indices regardless of the Qs or SPY, it just doesn't have a really great backdrop for volatility, really getting slaughtered and going back to where we had in February. I don't see that happening. But a good start here. VXX down 16% in the past 5 days. And then how about this? They're coming for the winners. GDX is your second worst area to be. It's not down 16% in a week, but it's down 5% with a bit of a reversal today, up 1.2%. So now what? We were talking about GDX, one of the best spots in the market to be, and I didn't want to. So it's vol, worst performer the past week, gold miners, anything honestly gold related. I picked GDX because it was the most liquid and it's had the most absolutely amazing year. So I think this will be in distribution mode for the next 2 weeks, and that will serve as your entry point. I think this gets to right around 45 quarter. So I think you have, maybe another 10% to go to the downside. I'd be patient. It is a winner. It still has awesome flows. You can see this isn't even getting close to bucking beneath its 50 RSI. If it lingers and it stays at 47 for a while, like by Friday, it's stuck at 47. That might be as good as it gets. But I'll give this one some time. I do think you potentially get, $46 or so. And that's your 50-day moving average. And it's been known to go to that for resting after a bull move. It did it April 7th. It's done it in March. It's done it many times. So we'll leave that at that. And working off overbought conditions, there is lines, of people. This isn't the short line of the DMV and what have you. This is a superstar. So that's what I'm saying. Be patient, not too patient. Thank you for narrowing it down. I will take a look at them if they're liquid and if they're in my system. Okay, are there single stocks? If you could just talk more to it, and then maybe you could even say what your position is or not, long, short, etc. Lastly, thank you for that. Top 3 losers of the past 5 days. Last one, oil. I really have to squint for this one because there's not a lot of losing areas. It's been vol and it's been gold miners. Okay, and then oil. Oil today down 1.8% today. Some of the energy complex had a good move. U.S. oil, not so much. So as you look at the chart here, doesn't look great. Heavy. Falling 200 moving average, the lows, like everything else, April 9th. I think this probably is it. There's a confluence of moving averages here at 69 even. Maybe it has another good day or two to get to that 69 handle. I'm not so quite sure. And what's more likely is this one's going to head towards about 65 to 66 over the next 2 to 3 weeks. Also, even on this rally, coming from 61 to 69, we couldn't even get above a 50 RSI. To me, definition of a death cap bounce. Don't want to own that. Avoid that. Again, United States, major consumers. U.S. oil is priced in dollars, which is being trash, as well as just, if you have recession fears, and I think 60% of CEOs are expecting a recession in the next 6 months, that's global growth diminishing. And of course, with all the tweets and all the tariffs, that's stifling our own growth from within. So don't love oil. I could see you giving it the benefit of the doubt all the way. This almost looks like an earnings move, but all the way till April 2nd, April 3rd, there's no reason to be interested in this, in my opinion. And then, of course, oversold conditions quickly followed with the 52-week low. So don't love oil. I think this was the run. I would have been convinced if it closed above 69 several days. And right here is my cursor, 79, and it touched it twice, or it closed above it twice since the 17th. So don't love it. Doesn't give me warm fuzzies. More than likely is a move towards 65 in the next 2 to 3 weeks. Top 3 trades of the past 5 days: short vol, long ARK, long IGV. Those are your best trades in the entire marketplace of the past week. So derivatives trades are just popping out here. You could have for sure sold VXX calls. You could have sold VXX call spreads, 25 delta calls, 1x2 call spreads you could have done as well. We're trying to say net credit, so you get that collection coming off of high premiums, right? You could also bought VXX puts. Don't really usually recommend that because it can go sideways on you quickly. Also, when we're talking about long ARK as being one of the best trades, second best trade in the entire marketplace, could have sold ARK puts. We talked about that on Friday. We talked about it last week. This trade will come in vogue again. I mean, I think we just missed it, that part. You would have paid handsomely. Hope you got in on that. And then IGV, that was a good one. Also, you could have sold puts on that. Also could have bought calls, but again, I'm trying to say net credit. Okay, time for you green trading. Let me take a look at what this is. MRX. MRX is Marex Group. This is a capital markets financial services platform provider. Okay. Are these guys like brokers? I think I've actually heard of them. They're a $3 billion firm. Okay. And it seems they are European. It looks like they're out of the UK. Well, we've been talking about Europe being the place to be. This looks great. I don't know what you were. Oh, let me put it up on the screen. That would help. Boop. Here's Mark's one. Oh, dude. Looks great. 52-week high. Let me see. Is this an all-time high on this sucker? Oh, so this just started trading. This started trading in April 2024. Wow. So barely registering a 200-day moving average on this. Yeah, so this looks great. 52-week high or all-time high. Technically, it started in April, so a one-year high here. Looks great. Like I said, this place to be in terms of fully targeted, fully valuation right now. Like I said about Germany, it's goes for this a little bit. I think these things are fully valued for right now. It's a great train to be on. But for me, right here, Marex, fully valued at 44 even, to be frank with you. This one is on the more volatile side. I think this heads to about $41 potentially. If volatility catches up and there really is an exit for the time being and people flock back into the dollar, I think this can get all the way down to 38.5. Okay, but more likely, because this looks like it has just had an absolutely stellar run since March 26. Wow, 34 to 44 in 1 month. Congrats to you if you're in that one. Looks great. Yeah, as I said, ugly, more likely sell-off. It goes to 41 over the next 2 to 3 weeks, but I think it might have a little bit more to go. It looks like the bull run for this just kind of like started. I think it's still going. This candle looks like it wants to go to 45, and then I would see it pull back to 41. This one looks great, though. What is this? MWG Multi-Ways Holding. You're bringing some new tickers to the fold here. What is this thing? It's a trading company and distributor, heavy construction equipment in Singapore and Australia. This is a $9 million company. I can't do that. That's crazy talk. I don't really like doing. This is a 30-cent name. Don't like doing that. Just to apply, chart as a chart is a chart. Allocate appropriately for this one because this is literally a penny stock. $9 million is the CEO can sneeze the wrong way and this thing goes down to 0 or 0.001, as you know. So, this one looks good right now. I think it heads to, it's just so difficult because you're looking at a thing that goes 4 decimal places. So I don't really want to do this. But I do think it potentially goes higher and maybe tags its 200-day moving average, which is 33 cents. But take that with a massive grain of salt. That's almost like Rocco doing technical analysis. Rocco's the dog. And then your last one is HWM. Oh, yeah, sure. Howmet Aerospace. This is more like it. This is just a tad bigger than your last ticker. This is a $55 billion company, and that we can do some analysis on. This is, of course, aerospace and transportation, totally global, U.S., Japan, France, etc. This thing looks great. Just amazing flows all year. You look at the stuff that we just pulled up, gold, honestly, you pick a ticker. They've had tests. Yen Mageddon, nobody wrote Howmet memo on that. The closest test was 3 weeks ago, and it was ugly, and they bought it right up, and it's right at a 52-week high. Is this an all-time high? Yeah. So February 25th, February was the all-time highs right here. So this thing, wow, can't keep a good man down. This looks great. Maybe it has a little bit more of a move towards 140. Again, the actual high is 140.5. Potentially wants to do that this week. I'm not really sure. It's a great looking stock. I think what's more likely, though, is a pullback to 128 over the next couple of weeks. And when that happens, you get in and buy it. Just be aware, though, my data provider says that there's earnings for this sucker on Thursday. So maybe that is your, your setup. If if they say bad things, obviously, or they guide down, it will sell off. If they surprise to the upside, wow, this thing is going to new highs. I am. Okay. Oh, you are NWG. That makes more sense. I didn't think you were in. There you go. You gave me a good ADR name. Okay, we'll do that for that. Okay. So this is NatWest Group. This is a large bank from the UK. So pretty much, $53 billion bank. Yeah, what I say is not going to change. So this one looks fully targeted to me as well. I like $13 here for a target. Is this an all-time high for this sucker? Not so, because back before the financial crisis, It's split adjusted, but this thing was had its heyday back in 07. But right here, 52-week highs. This thing is cranking. Again, look at this chart. Great example. Thank you for bringing this up. One of the best charts we've seen in the entire show. Not even close to its 200 moving average. It got somewhat close on the January 10th. And then after this, nothing, even from the past couple of weeks. So this thing looks absolutely stellar. I think it's fully valued right here. I think the next 2 to 3 weeks brings it down to about 12 quarter. I think it happens, which would be a decline of about 70 cents. And that will be your stop at the train to get on board. But yeah, you brought great stuff today. Thank you for that. Much appreciated. Thank you for viewing. We will be back on Wednesday with another program. And yeah, tune in tomorrow at 11 a.m. on X. It's the chart report spaces. All right. See you next time. Peace, y'all.